what do you make of the price of gold?
Gold is getting liquidated because there's less dollar flow, more dollar demand and dollar need. So gold as a reserve asset is being sold as a reserve asset. And unfortunately, it's an illiquid market where buyers are scarce. So a lot of volatility in gold, and it's spilling over into silver for, silver got way too far ahead of itself. So the fundamentals in silver were bad anyway. So the short run for precious metals is not a positive outlook. Though it should improve over time, but you don't know where the bottom is in either one of those, just in the short run anyway.
Why is the demand? What's the demand coming from for the US dollar?
Well, part of that is because there's a shortage of dollars. It's just, basic supply and demand. If you got to increase demand for dollars at the same time you have, less supply of it, the dollar goes up in price. I mean, it's not exactly how it works, but in the conceptual terms, that's how you should conceptualize how currency exchange values move, especially the US dollar. So the US dollar strength is a reflection of fewer dollars floating around the world.
What do you make of the new Fed chair and the meeting? He seems more hawkish than expected.
Yeah, and then the market keeps saying it's a complete mistake. The markets are, that's the upside down Pringles over here. The markets are, look, the 2-year, 10-year spread in U.S. Treasuries, very nearly reinverting again, which is a signal that, again, if you want to talk about demand destruction in the macroeconomy, that's one that suggests the market's getting a little bit nervous about that side of things, which would mean that if the Fed does raise rates in the short run, they're going to come rolling back down at some point, which is what the markets are actually pricing. You look at inflation protection securities, inflation expectations, they crashed. They absolutely plummeted, even more than oil prices, which is another signal that the market is thinking this is not just supply normalization in oil. There might be some demand destruction. If that continues to play out, then the Fed can hike in July or September, and it's going to be cutting by the end of the year no matter what.
I have another question for you. One of my guests yesterday or 2 days ago, let me see the name. I'm really bad with names, just disclaimer, like as in horribly bad. I still don't remember the name of my own mother. So yesterday, 2 days ago, I had a guest, and you'd know him. Screw it. All right, I can't find it. So, and he was making, he gave me a very interesting theory. He's talking, and I've been talking to a lot of my guests about the price of, the manufacturing base in the US. And the US cannot bring back manufacturing to the country if the dollar remains high. It just doesn't work. So weakening the dollar may work in America's best interest. And a lot of people have looked at comments that Trump made earlier. I remember them from like a year ago, whatever it is, where he's talking about how a weaker dollar is a good thing or something along those lines, or Bitcoin or stable coins. Not stable coins, I think the Bitcoin, because they're dollar denominated, but Bitcoin could take some pressure off the US dollar, blah, blah, blah. But the gentleman I had, his theory was that the US could be intentionally weakening the dollar in order to bring manufacturing back to the country, as we're seeing now the world move away from deglobalization for national security. Is that possible?
No.
Oh, that was quick.
First of all, the U.S. government doesn't control the dollar exchange value. I know everybody believes that that's the case, and that the U.S. government has an interest in everybody making that belief, or the central bank has control. No, none of that stuff. The dollar floats based on the economics of currency movements, and the dollar isn't actually the dollar anyway. So that's Eurodollar. The world runs on a Eurodollar standard, which is already outside the control of the United States and Federal Reserve to begin with. So, yes, the Trump administration has.
Just a lot of my audience don't know. The Eurodollar is dollars outside the United States, pretty much.
Yes. The technical definition of a Eurodollar, and I know it gets confusing because it sounds like you're mixing up the European common currency with the dollar, but the term euro just means outside or offshore. So a Eurodollar is offshore dollars, and there's let's call
it offshore dollars, just for the audience to make sure to know what that
offshore dollars. But the thing is, there really isn't a distinction between offshore dollars and onshore dollars. It's all basically the same dollar system. The money that you use is not physical Federal Reserve notes or paper currency. It's not even Federal Reserve bank reserves, because nobody outside a bank can hold those. The money that you actually use is bank money. And banks we're talking about are not U.S. banks. They're U.S. banks, European banks, Japanese banks. They're global banks that run basically a dollar-denominated system. So that dollar-denominated system is not under control of the U.S. government. Yes, the U.S. has ability to influence bank behavior through several different means. A perfect example of that is when you go back to 2022. Remember the Biden administration made a huge deal about kicking the Russians out of SWIFT? Well, no, what the Biden administration had to do was go to Europe to put pressure on European regulators, to put pressure on European banks, which were the majority of the consortium that actually owns SWIFT, to try to delist some of the Russian banks that participated in SWIFT. So the point of this is that the global reserve currency that we use is a bank currency, not a government currency. So in the context of the Trump administration wanting the US dollar to weaken, they do want the US dollar to weaken, but it is not in their ability to weaken the US dollar. The US dollar is going to go where the mechanics of Eurodollar flows take it. Now, would a weaker US dollar bring manufacturing back to the US? No, absolutely not. We've had a weaker dollar period. In fact, between 2001 and 2000, actually March of 2008, when Bear Stearns failed, the US dollar continued to fall in value. And during that period, manufacturing jobs continue to be lost. And it's a simple matter of macroeconomics, basic macroeconomics. There's too much cheap labor around the rest of the world to make it economically viable to bring manufacturing jobs into the US without absolutely gargantuan subsidies, which, I mean, they've tried to do in certain areas, but overall, you're not going to bring manufacturing jobs to the US when the differences and differentials in labor costs are just so astronomically high. It won't matter if you even if you could revalue the dollar, you'd have to revalue the dollar so low that it would be catastrophic in financial terms.
All right. So 2 points. Number one is, the Fed could just print dollars. I know, not, just for the audience, not literally print dollars, but, sell more treasury, keep selling more treasuries, flooding the markets with dollars. I'm not saying they can control the price of the dollar, but they can definitely influence it. We've seen that happen historically. Whenever the printing press is on, the dollar weakens.
See, that's a misconception too. What does the Fed actually do? The Fed does not print dollars. The Fed makes bank reserves. And bank reserves are a quasi-money interbank, basically a clearinghouse loan certificate. So it's the best that the Federal Reserve can do is create these bank reserves and hope it somehow influences bank behavior, because commercial banks are the ones that own these bank reserves eventually at the end of these operations. And as the commercial banks own the bank reserves, unless commercial banks do something in response to whatever operation the Federal Reserve is undertaking, then it doesn't matter. The Federal Reserve is just moving stuff around from one pocket to another pocket. They're not actually creating useful money in the outside system. And that is one of the biggest problems that we had with QE. QE attempted to influence the behavior, first of all, of people in the real economy, which that didn't work. And QE attempted to influence the behavior through bank reserves, influence the behavior of commercial banks. And commercial banks, especially after 2008, did not respond to that signal because, of course, they didn't. They were cutting back, they were pulling back and cleaning up their balance sheet. So it didn't matter what the Fed did. The commercial banks continued to pull back and pull back and pull back, which is why the inflation that everybody predicted from the Fed's money printing never happened. It didn't happen because commercial banks are the monetary system, not the central bank, or what everybody calls the central bank, the Federal Reserve. And this has been consistent throughout history, and even just recent history. The Japanese experience with quantitative easing was exactly the same. In fact, the Federal Reserve talked about it before even getting to 2007 and 2008. They talked repeatedly about how the Japanese QEs didn't work because the banking sector in Japan was so messed up. So the point of this is that what matters is the banks. And the Federal Reserve's policies are meant to influence bank behavior. But if those policies can't influence bank behavior, it doesn't go anywhere.
Jesus, how decentralized is the US dollar?
Very decentralized, though not decentralized enough. It's run, I mean,
we don't need Bitcoin, but the way you're describing it, we pretty much don't even need Bitcoin anymore. The US dollar is becoming Bitcoin.
Well, no, I think it's the opposite. I think we do want cryptocurrencies, not Bitcoin. Bitcoin's not going to work, but you do want cryptocurrencies because it's not decentralized enough. And it's basically broken down because it is, you have basically a global cartel of banks, which not ideal for a currency. Now, yes, it worked. It worked for many, many years, and it created unbelievable prosperity as it did. But that was only because of the unique circumstances of, technological evolution. We needed the banks to create a payment network and a payment system that was deep and dependable in order to allow for the latter half of the 20th century to unlock all sorts of prosperity. And banks were basically the only kinds of businesses and firms that could do something like that. So they kind of took it on themselves to create this global payment system that then created a global homogenized reserve currency system. But we've progressed way past that, because you have to ask, what does a bank actually do? A bank isn't a storehouse of money. You don't put physical cash in a vault. A bank is nothing more than a bookkeeper. It's a ledger keeper. We use a form of ledger money. Nowadays, with the technology we have, and Bitcoin proves this, We have different kinds of ledgers that that are distributed and decentralized enough. We don't actually need banks to create or to run a monetary system for it, or a payment network for us. We can actually do truly decentralized cryptocurrency ledger money. So we can move beyond the banking sector, with a little bit of disruption involved, and a little bit of additional evolution. But the dollar does need to be replaced. It needs to go. The Eurodollar, let me be clear, the Eurodollar system is past its expiration date.
I don't know if I want to read this report, but before that, I had one more question. Based on what you're saying, then you wouldn't be too bullish on the price of gold, based on what you're saying, because a lot of it, a lot of the bulls on gold is because of the devaluation of the US dollar. But if you don't think the US dollar will be or can be even devalued, then the price of gold will not reach the numbers that people, the figures that people are throwing around.
Well, they're wrong about that. That's the problem, is that gold is not an inflation hedge, nor is it it's not a competitor to US dollars to begin with. Gold is simply a safe haven asset. So anything that drives safe haven demand,
US dollar is, that's one of the features of the US dollar as well.
Yeah, but those two can coincide. They're not mutually exclusive. So you can have periods where the US dollar is rising in exchange value. And in fact, I would expect gold to rise at the same time, because the US dollar is rising in exchange value because of the mechanics of the Eurodollar, where money supply and money circulation are being tightened. And the deflationary consequences of tight money lead to increasing safe haven demand. You saw that during 2008, believe it or not, even though gold was incredibly volatile just because it tends to get sold as a collateral of last resort. But overall, gold performed much better than most other assets, despite the fact that the dollar was screaming higher and we went through a deflationary event. It's a mistaken conception, the idea that gold is strictly an inflation hedge or hedge against a falling, devaluing dollar. That's just simply not the case, and it's not true. So you can be bullish on gold and still think that the US dollar is going to go up. In fact, if you think the US dollar is going to go up and go up sharply because of deflationary conditions, then you were going to want to own gold because there's going to be more demand for safe haven. And we got to remember, gold is not strictly about what's happening with the US dollar or the US specifically. There is tremendous amount of demand for gold from places like China for that very reason. Regardless of US dollar mechanics or anything else, you're sitting around in China, you think, there's nothing going right here. The Chinese system, it's riddled with a low-grade banking crisis that threatens to pop out any day now. You've got the property development sector, a property real estate bust that continues to bust and continues to create all sorts of dangers and downside. The Chinese economy is a mess and getting worse all the time. So there's tremendous demand for gold from China because it's one of the only assets that you look around and you think, well, this is probably the only thing worth buying. And again, it's the same safe haven type of behavior. So that's what underpins gold. And the more gold goes up, the more you think, okay, what's driving safe haven? And there's no shortage of stories and explanations these days about why there would be sustained demand for safe haven.
Last question I want to ask you is, who do you think benefited the most or profited the most from the war in Iran? This is what the report says. Al Jazeera report just mapped out who actually made money from the Iran war. The list is exactly what you'd expect, and somehow still shocking when you see the numbers laid out. Go through Saudi Aramco, Total Energy, so energy companies, and starts talking about the price of oil, tanker companies as well, and then prediction markets.
Yeah, so you know what the next one's going to be, Mario?
Which one?
The next one's going to be development companies. Development companies there's going to be a tremendous amount of build. I mean, they already talked about the $300 billion fund to rebuild Iran. I mean, that's just a drop in the bucket. If there is some positive resolution here, you expect some of those Gulf state companies. In fact, that's maybe one of the things that China and Xi talked about. Maybe Chinese companies are leading the reconstruction and rebuilding of Iran. That's not completely far-fetched either. Those are going to be the businesses that are really going to win from this, as in any conflict. The people who clean up at the end and rebuild and start from scratch, those are the ones who really make the money. And of course, there's going to be, rebuilding of arms, restockpiling, and all that kind of stuff. But really, to me, it's the developers that are going to win.
Interesting. Anyone else?
Financial firms, the UAE.
They always win.
Yeah, well,
the UAE because of Fujairah.
Because of a lot of different things. There's a lot of stuff going on in the UAE right now. Yeah, they took a lot of damage and a lot of hits, but I think the UAE positioned itself to come out on both sides, whatever happens here. You're already seeing the UAE. I mean, just, what was it, today or yesterday? They talked about the UAE is becoming a massive Eurodollar center. I mean, they just floated a huge total return swap for Nigeria and US dollar funds. The UAE's status as a dependable dollar distribution money center offshore, because the UAE has a special district that is very definition of offshore. I think the UAE has played it very smartly to become a dependable gateway for financial firms and financial resources to go through the Middle East and on into places like Africa, parts of Asia, and maybe financing the reconstruction of Iran and maybe other parts of the Middle East too.
Interesting. It's very contrarian to what a lot of people are predicting, that the UAE will be one of, or people were predicting, especially during the war, that the UAE will be one of the worst hit countries out of this. But since the war ended early and the UAE is already improving relations with Iran, things are not looking that bad at all anymore. You're saying they're not only they're not looking bad or neutral, they're looking very good.
I think they are. I think the UAE comes out really far ahead.
Interesting. Jeffrey, always interesting. I should probably next time I have you on the show just say, Jeff, not Jeffrey, Jeff. You tell me what's interesting, what's on your mind, instead of me trying to come up with good topics.
The portfolio that performs in one economic regime can get crushed in the next. So in this free webinar, we're going to reveal what those 4 economic regimes are, how to identify them, as well as the assets, historically speaking, best positioned to perform in every environment. So reserve your seat now and learn how to prepare your portfolio before the economy shifts again.